Welcome back to the deep dive. Look, there's just no escaping it, is there? The buzz around artificial intelligence, AI, it's everywhere right now.
It really is incredible.
Yeah, and we've seen these AI stocks. I mean, they've just skyrocketed recently. It makes it pretty clear this is a top technology, you know?
Absolutely. It feels like it's set to change almost everything.
Exactly, from like how a warehouse operates all the way to how scientists discover new drugs and the market projections. We're talking trillions.
Trillions, yeah. And you see companies, the big ones like Nvidia doing chip design, or Amazon with e-commerce and their cloud services.
Right.
They're already seeing double-digit growth quarter after quarter. Billions in revenue just from their AI stuff.
So it's completely natural that you, listening, might want to get in on this exciting AI story.
Well, of course. Who wouldn't?
But here's the tricky part, isn't it? This field is moving so fast, it's so dynamic. Trying to choose just one or two potential winners, that feels, well, really difficult.
Yeah, like finding that needle in a haystack, as you said. But there's some good news here.
Okay.
You don't necessarily have to pick those individual winners. There's another way.
Right, the ETF approach.
Exactly. Exchange-traded funds, or ETFs, they offer a really powerful solution, actually. You can invest in sort of the best of the bunch with one simple purchase.
A shortcut, almost, to being well-informed and invested in the sector.
Precisely. It streamlines the whole thing.
Okay. So that's our mission for this deep dive then. We want to explore how an ETF can give you that broad, balanced exposure to the whole AI revolution. And we're going to focus specifically on a recently created ETF that, well, it might just be the top one to look at right now. And you could potentially start with, what, maybe $100?
Potentially, yes. It's quite accessible.
Okay, let's unpack this then. For anyone maybe new to this, what exactly is an ETF? How does it work compared to just buying, say, a share of Apple?
Right. Good question. So the basics first. ETFs, they trade daily on the market, just like stocks do.
Okay, so easy to buy and sell.
Very easy to get started, yeah, even if you're a new investor. Now, the key difference, and this is important, is that ETFs bundle lots of investments together. And because of that, they have fees.
Ah, the expense ratio.
Exactly, the expense ratio. You want to look for one that's ideally pretty low. Generally, less than 1% is considered reasonable, so the fees don't, eat too much into your returns.
And the fund we're talking about today fits that.
It does. It has a 0.75% expense ratio, which for an actively managed fund like this, based on specific research, is actually quite competitive.
Okay, so you've got the trading aspect, the fees. What else?
Well, the really powerful thing about ETFs, especially I think in an area involving a newish technology like AI, is the instant diversification.
Right, spreading the risk.
Exactly. That's so important here because, let's face it, new tech is risky. Some companies will boom, others might bust.
So if one stock in the fund takes a nosedive,
the others are still there to potentially compensate. It limits your risk because you aren't putting all your eggs in one basket. It balances things out.
Okay, that makes a lot of sense. So here's where it gets really interesting, I think. You mentioned a specific ETF.
Yes.
The Dan Ives Wedbush AI Revolution ETF. The ticker is IVES. IVES.
That's the one.
And it's brand new. Launched just early this month.
Very recent, yes. And what makes it stand out is that it's built directly around the research of a really well-known tech analyst, Dan Ives from Wedbush.
Yeah, I've definitely heard of Dan Ives. You see him talking quite regularly, right? On TV, social media, about tech stocks, including AI. He seems pretty bullish on the industry generally.
Oh, very bullish. And his reputation is built on, deep analysis in the tech sector.
So how does this fund actually work then? What's the thinking behind the companies they've chosen?
Well, the idea is that Wedbush, based on Ives' analysis, has picked about 30 fantastic AI players, as they call them.
Okay.
The selection process focuses on identifying companies that they believe are positioned to gain significantly throughout the entire AI spending cycle.
Ah, so not just one part of it.
Exactly. It spans everything from, building the actual infrastructure, the picks and shovels, if you will, all the way to the companies applying AI to solve real-world problems.
So you get exposure to different phases of growth.
Precisely. You'll find chip designers in there, cloud service providers, software companies, internet players, a whole range. It lets you potentially benefit from each stage as AI develops.
That sounds pretty comprehensive.
Yeah.
And I assume it includes the big names, too.
Oh, absolutely. You'll get exposure to the AI giants, Microsoft, Nvidia, Broadcom. They hold the top 3 spots right now.
Okay.
Each with a weighting of about 5%, or maybe a bit more. So yeah, the major players are definitely represented.
But what intrigues me looking at the holdings is that Ives' research also brings in companies that, frankly, might not have been the first ones on your radar screen for AI.
Like which ones?
Well, there's ServiceNow, for instance, described as a cloud platform for automated workflow management. Okay, I can sort of see the AI connection there with automation.
Right, workflow optimization is a big application area.
But then there's Oklo, a nuclear energy company, powering data centers. That one surprised me. How does a nuclear energy company fit into an AI ETF?
Yeah, that's a great example of thinking about the broader ecosystem, and it's exactly why this kind of curated fund can be interesting.
Go on.
Think about the sheer amount of power that AI data centers consume. It's enormous and growing rapidly.
Right, I've heard about that. The energy demands are massive.
Exactly. So reliable and ideally sustainable energy sources become absolutely critical infrastructure for AI. Companies like Oklo focusing on advanced nuclear designs, potentially for data centers, they're becoming part of the AI supply chain, even if indirectly.
Okay, so it's enabling technology for AI's growth.
Precisely. It's about powering the revolution, literally. And just to give you a quick sense of Oklo, looking at the data, its market cap is around $8 billion. The price is currently around $55.24, but look at its 52-week range.
Wow, $5.35 up to $73.55. That's quite a swing.
It shows you how dynamic and maybe speculative some parts of this wider ecosystem are, but it's part of that bigger picture Ives is looking at.
Okay, I see the connection now. It's thinking beyond just the software and chips.
Right, and that connects back to why this specific Ives fund could be considered, a really strong bet right now. You're essentially tapping into Dan Ives' extensive research and his team's view on who's positioned to win across this whole high-growth industry.
Both the direct players and these crucial enablers.
Exactly. You get that broader perspective baked in.
And the accessibility point you made earlier is key, too, isn't it? You said it trades for about $25 right now.
Around that, yes. Which means, even with $100, you could potentially scoop up a few shares and get started. It lowers the barrier to entry significantly compared to buying individual shares of some of those top holdings.
So let's bring it all together. What does this all mean for you, our listener, trying to navigate this space?
Well, I think the main takeaway is this. Look, you still could, and perhaps should, research and invest in individual stocks if you find companies you really believe in that are well-positioned to win in AI. That's always an option.
Right. Don't stop doing your own homework.
Definitely not. But an ETF like this IVES fund, one that's built on, years of specific research and expertise from analysts like Ives, it's just a fantastic option to consider adding to your portfolio.
Give you that broad and balanced exposure we talked about.
Exactly. It helps you potentially benefit from this really game-changing growth story without facing that, frankly, daunting task of trying to pick every single winner yourself.
So, for you navigating this complex AI investment landscape, an intelligently built ETF like this Dan Ives Wedbush one we've discussed, it really offers a diversified, kind of expert-guided way in, doesn't it?
It does. It's a streamlined way to understand and, importantly, participate in what's happening.
It makes this significant shift feel maybe a bit more manageable.
I think so. And, knowledge is really most valuable when you can understand it and then actually apply it. Hopefully, this deep dive has given you a clear, actionable path to maybe engage with the AI revolution, making it feel less daunting.
Absolutely. Makes it more accessible.
Yeah.
So here's a final thought to leave you with. As AI keeps evolving, and it's moving at such an incredible pace.
And unprecedented, yeah.
What unexpected industries or maybe niche applications of AI might pop up in the next few years? Things we aren't even thinking about now. Could those create the next wave of fantastic AI players or maybe critical enablers that even top analysts will be tracking for, future funds? Something to mull over.